Stocks had a rough week and actually have had a rough 3 weeks with the E-mini S&P settling lower over the last 3 weeks. That hasn't happened in a long time and certainly not something that we're used to given the strength of the equity market that we've seen even going back to the middle of March following the initial pandemic knee-jerk move lower. We've seen equities rise with a few hiccups, but nothing on a sustainable purpose. And this now we're seeing 3 weeks in a row, 3 Fridays in a row of lower trade. And the market right now trading through the 50-day moving average is going to bring in more sellers. It's a quadruple witching Friday, which brings in a lot of back and forth heavy volumes today. And we did see a big move down to 32.80 in E-minis, but we have since bounced back heading into the close. So while things were bad, they could have been a lot worse. And at this point, the key now is the 50-day moving average. We got through that. That was 33.30. That's going to bring in additional sellers. I think at this point now the market's going to start to kind of trade more off what's happening in the election, maybe some profit taking chips off the table, lowering your risk, maybe moving some of that money into some safer avenues until we get through this whole November mess. Probably likewise, we'll continue to see that not only this week, but next week and the weeks to come. Little by little, it makes sense taking some profits on some of these higher risk investments. The VIX index, while we did see another down day in equities, another down week in equities, the VIX index only nudged higher ever so slightly, trading around 27, still below 30, so not seeing any alarms going off. But again, whenever the VIX goes up, it is something to write about because the VIX has while we have seen some pretty wide ranges in volatility during the pandemic, it has been very much a sustained trade sideways and even lower over the last several weeks and even months. So right now we're seeing a little nudge higher given the fact that we continue to see selling, and while that probably will continue into next week modestly, it doesn't expect there to be any major breakouts. And next week, what do we have? Well, next week we have some housing data, we've got some claims data. The key for claims is that they've been below 1 million for the last 3 weeks. Can it continue that trend? And can it continue to improve to a point that we get out of this 850, 900,000 claims per week being filed? Likewise, we have Mr. Powell speaking twice on Wednesday. He'll talk about COVID and the economy. Thursday, he'll be giving his quarterly CARES, he'll be speaking to the Senate Banking Committee about the quarterly CARES Act. That is something that's regularly scheduled. So again, it's nothing that's going to change headlines, but when the Fed chairman speaks, I think that people tend to listen a little more closely. So another rough week for equities, and next week could be more of the same following a quadruple witching Friday, but certainly a lot of this is expected as we have a lot on the calendar, not only in the weeks ahead, but certainly with that US election looming in November.